Ladies and gentlemen, welcome back to the channel. Unfortunately, I wish I had good news to bring you on a Sunday afternoon. Football freaking Sunday. Go Lions, baby. But unfortunately, there's not a lot of good news today, okay? Here in today's episode, what we're going to do is we're going to look at what China just said to Trump about the 100% tariffs. China's basically saying, we're ready. If that's the route you want to go, path you want to go down, the route you want to pursue, if you will, I can only imagine what Trump is going to say to this. And anytime now we could get those headlines. Well, in today's episode, we're not only going to share what China just said, how the markets probably will respond to this tomorrow, what the key difference is between now and back on April 2nd. There is one big difference, and kind of the timeline and path ahead you need to be mindful of in terms of a potential recession. For an example, a recession because of a trade embargo with China does not start on November 1st. But every day after that, the probability starts to gradually increase, okay? But we'll get into that here in today's episode. What we will also do is take a look at the earnings for this week and the economic data that we're going to get this week, including a key catalyst via a speech from Jerome Powell. See, trade tensions with China, tariffs, kind of part of the reason the Fed waited to cut rates so long. They're worried about inflation. Well, throwing 100% additional tariff on China, how does the Fed think about that? Is the Fed still expecting to cut in that environment, or do they take more of a, okay, we're going to wait and see what happens approach again? That's also going to be critical for markets. Hit the like button as well as subscribe to the channel if you have not done so already. Ladies and gentlemen, come check out the trading community as well down below in the description of this video if you have not done so already. What we do over there is try to invest in stocks in the AI theme, AI software theme, energy, quantum, robotics, gene editing, biopharma, some of the emerging technologies over the next 10 years that you almost have to be invested in. If you're not invested, at least to some degree, in all of those areas, I think you're going to regret that 10 years from now. I think that's going to be a huge wave of wealth creation in those 5 or 6 areas alone. What we're trying to do, and what we are doing, is going out and investing in the high quality companies that are emerging in these fields that Wall Street just doesn't understand the opportunity in, okay? We're trying to be early to high quality stocks in secular, call it the decade-long bull market that I think is coming for these areas, and largely already here. Back in April, when markets crashed 20%, we made hundreds of thousands of dollars. Collectively in the trading community, we made millions of dollars. If something like that happens again, we will make even more money. Now, history doesn't always repeat itself, but it normally does. It usually rhymes. That's kind of how the saying goes, something like that. No matter what happens here, whether it's a shallow dip, a larger crash, or stocks skyrocket from here, you're going to be in the best position possible to benefit no matter what happens if you are in the trading community. I'm not a financial advisor. I'm not a financial planner. This is not a recommendation, neither in this video or in the trading group, but the proof is there in our returns. Our returns were 220% before Friday, year to date. Down a little bit from that, albeit, but still in the 200% range, outperforming all hedge funds and institutions. So check it out, link down below. But with that said, let's get into today's episode. So here we have this. It says China defends rare earth export curbs as legitimate, hits back at U.S. tariffs as Trump-Xi meeting hangs in the balance. And honestly, I'm just going to read the whole article because it gives a lot of backstory and a lot of things you need to hear, right? You need to be familiar with this whole story so we know when a pivot is coming, right? So it says China on Sunday defended its new export controls on rare earths as a legitimate measure under international law, pushing back against U.S. accusations of economic coercion after Washington announced sweeping retaliatory tariffs and export restrictions. The Chinese Ministry of Commerce said the controls issued on October 9th were part of Beijing's effort to strengthen its export control system and, quote, better safeguard world peace and regional stability amid what it described as a turbulent global security environment. The measures, which now cover not only rare earth materials but also related intellectual property and technologies, were announced just weeks before a potential meeting between U.S. President Donald Trump and Chinese leader Xi Jinping. Quote, these controls do not constitute export bans. Applications that meet the requirements will be approved, a Commerce Ministry spokesperson said. China has fully assessed the potential impact of these measures on the supply chain and is confident that the impact will be very limited. Beijing's new curbs also require foreign entities to obtain a license to export products containing more than 0.1% of domestically sourced rare earths or manufactured using China's extraction, refining, magnet making, or recycling technology. Applications for items that could be used in weapons or other military purposes will be denied. Shortly after Beijing tightened export controls on rare earths, the European Chamber of Commerce in China reported a backlog of export license applications awaiting approval, saying the new restrictions, quote, add further complexity to the global supply chains of rare earth elements. In response to Beijing's move, Trump on October 10th announced new tariffs of 100% on imports from China, quote, over and above any tariff that they are currently paying, beginning November 1st. Trump also said that the U.S. on the same date would also impose export controls on any and all critical software. Stock markets plunged after Trump said on Truth Social that there is no way that China should be allowed to hold the world captive with its rare earth policy, wiping $2 trillion in market value. Trump also said on Friday that there's going to be a period of pain for the U.S. economy. I think that also hits, right? If the president is like, yeah, this is going to be good long term, but could be really bad short term, people, jump to worst case scenarios pretty quickly. It says, quote, the Chinese Commerce Ministry on Sunday local time accused the U.S. of double standards. This is where you get into, this doesn't sound great for getting an off-ramp or preventing these tariffs from going into effect. It says, noting that the U.S. control list covers more than 3,000 items compared to fewer than 1,000 on China's list. China accounts for about 70% of the global supply and has repeatedly used the critical needed materials as a bargaining chip in trade discussions. It says tensions whipsaw. Hours after tightening export controls on rare earths, Beijing also announced that it would start charging U.S. ships docking at Chinese ports from October 14th, mirroring a new U.S. fee on Chinese vessels arriving at U.S. ports, set to take effect the same day. The U.S. accounts for roughly 0.1% of global shipbuilding compared to 53.3% for China, according to the Center for Strategic and International Studies. The Chinese Commerce Ministry defended its reciprocal decisions as, quote, necessary passive defensive actions. It added that the U.S. action seriously undermined the atmosphere of the economic and trade talks between the two sides. Senior U.S. and Chinese officials met for trade negotiations in Geneva in May, the first since Trump launched a global trade war. A follow-up meeting in London in June led to a trade framework, while a third round of high-level talks took place a month later, where both sides signaled progress in negotiations. The most recent trade meetings in Madrid in September yielded, quote, a basic framework consensus on the divestment of Chinese-owned TikTok ahead of a deadline to either sell off its U.S. business or shut down the social media app in the country. On September 19th, Trump and Xi spoke on the phone but did not finalize a deal on TikTok. After the call, Trump announced that he and Xi agreed to meet on the sidelines of the Asia-Pacific Economic Cooperation Forum during the last week of October in South Korea. While China has been silent on future meetings, Trump had also said that he would visit China early next year and President Xi would come to the U.S. at a later date. However, Trump on Friday threatened in a social media post to cancel his upcoming meetings with President Xi after China's latest tightening of export curbs on rare earths. Now we have some other headlines here. It says China signaled that it would not back down in the face of a 100% tariff threat from President Donald Trump. I can't wait to see how Trump responds to this. I mean, I can only imagine the markets are not going to like. China says it will stand firm against U.S. tariffs. Quote, "We do not want a tariff war, but we are not afraid of one." Again, not excited to hear what Trump's response is. And again today, China warns U.S. of countermeasures if Trump does not walk back the 100% tariff threat. So China's saying, yep, we're prepared to do other shit to, just ramp things up if you don't walk back the 100% tariff threat. So, yeah, we haven't heard anything from Trump so far on this that I've seen, but I can't imagine Trump's going to have good things to say. Now, I need everyone to understand perfectly and clearly what I'm about to say next. This is vital, okay? Back on April 2nd, part of the reason we really, people got so fearful so quickly, people were caught off guard, is because this was not like a trade war launched against one country. It was a trade war launched against everything, like everyone and everywhere. From Thailand to India to Canada to Mexico to Europe to China, right? The list goes on and on. Well, right now, again, it seems like everywhere else is just fine. Negotiations are going as planned, but not with China. So China is the most important single country. I don't think we could get by with a trade embargo with China without pain, like Trump says, without some kind of recession. Here's the tricky part. On November 1st, if a trade embargo starts, that doesn't mean you're going to have a recession. What it means is the stopwatch is starting to tick, okay? The question would be, does a month give us a recession? Does 3 months give us a recession? Does 6 months give us a recession? I think once you get after the 3-month period, the odds of a recession really start to skyrocket. Okay? The fact of the matter is, our economies are way too interconnected to just cut off trade with a 2-week notice without there being disruptions. Okay? You can bet your ass Walmart, Target, all your retailers right now are, as we speak, scrambling to place orders from China. There's going to be a pull forward of ordering, kind of like what we seen the first time around. But after that, those products are sold and off the shelves, it becomes a much larger problem. So you probably have about 3 months, maybe 2 months, maybe a month and a half on aggregate, on average, until it becomes a big problem again. Now, again, good news is it's only with China. We don't have, other issues happening elsewhere. So it's a little different, but again, the point remains the same. November 1st, even if these tariffs go into effect, it doesn't mean a recession is guaranteed. It means the stop clock starts, and every day that goes forward, the odds of a recession go higher. So are we just immediately going to fall 20% like we did on April 2nd? Probably not. It's going to be volatile. We're going to be subject to changes in the headlines. But the longer it goes, the worse it gets. Now, with that said, let's get started with some of your economic data for this upcoming week. Now, we know that the government is shut down. If you don't know that, well, now you do. I would hope all of us would know that by now. So it means we're not getting a lot of economic data like we're scheduled to. We were supposed to get the jobs report like 2 weeks ago. Never got it. Okay? Some economic data we're just not going to get. Now, what's interesting is CPI was supposed to come out on the 15th, so this week, but it was actually delayed until October 24th. They say that it's being delayed because they want to add the annual Social Security cost of living adjustment, but it will be released whether the government is open or not on October 24th. Funny. All of these other data sets, they're not going to release, but they are going to release the CPI report. I would imagine that's probably because it's going to come out good. Now, this week, we're not going to get the CPI report. That is an event for next week. But I do want to point that out because I think it would make sense if they're going to release it. It's probably going to be a good number, right? And that's something to look forward to. Now, on Monday, we really don't have much. Fed Paulson gives a speech. Must be a new guy at the Fed because I've never heard that name before. But hey, new guys, welcome, welcome. For Tuesday, the big catalyst is Fed Jerome Powell. Going to be giving a speech here. I don't know if it's going to be like the last time Powell was on the calendar, and he literally just said a few opening remarks at a conference, did not say anything about policy, inflation, rates, or growth, or anything important. But we'll definitely be on the lookout Tuesday if we get any headlines from that. What does Powell say about the new founded trade war again with China? You know, does he say that affects anything? Probably not. But what does he say? Now, on Wednesday, we're going to get the Fed Beige Book that comes out at 2 p.m. This is basically like a rundown of how the Fed districts look as far as employment, inflation, growth. And the Fed says, hey, look at the Fed Beige Book if you really want to know how the Fed is thinking about the economy. So that's going to be important on Wednesday at 2 p.m. Thursday, you're supposed to get a bunch of data here. Philly Fed manufacturing, business conditions, capex, employment, new orders, and prices paid. A bunch of Fed speakers really throughout this week. Almost every day you have new Fed speakers. You're supposed to get retail sales, PPI, core PPI, initial jobless claims, like a bunch of data on Thursday. Assuming the government is probably not going to be open on Thursday, probably still going to be shut down, you're likely not going to get that economic data. But if we do, it's going to be a big catalyst. Now, on Friday, you get industrial production month-over-month, capacity utilization. Again, you were supposed to get building permits, housing starts, export prices, import prices, month-over-month and year-over-year. It doesn't look like you're going to get that either. So we're going to miss quite a bit of economic data this week, but I think the big thing is going to be Powell on Tuesday if he comments anything. But really what's going to move markets is any headlines that come out from Trump or from China on trade. Now, also for this week, you're really going to get the start of earnings season. So tomorrow, you really don't have much for earnings, Fastenal, Monday morning. But Tuesday pre-market, BlackRock, JP Morgan, Goldman Sachs, Citi, Wells Fargo, Johnson & Johnson, Domino's, Ericsson, Albertsons. And then Wednesday, you have ASML, Progressive, Dollar Tree, Bank of America, Morgan Stanley, Synchrony, Citizens, Abbott, First Horizon, and Prologis. Wednesday and after hours, United, JB Hunt, Pinnacle, Banner Bank, a couple other banks there as well. Thursday pre-market, TSMC. People look into TSMC and ASML earnings as kind of a hint towards NVIDIA. What we've heard from Jensen Huang is that demand for their GPUs is accelerating in the last 6 months. So there's no reason, I think, to be, fearful about this earnings season. I think this earnings season could be outright impressive. Now, last earnings season was one of the best earnings season surprises we've seen in a long time. EPS was expected to come in with a 4% year-over-year growth, and it came in over 11% growth. It was the strongest earnings we've seen in years, okay? And that's partially why stocks have done so well. Well, I think this earnings season is going to be another big surprise, and that's going to help support markets and drive earnings expectations higher for next year. But again, as November 1st comes around, it's not like outright recession territory November 1st. But if it lasts a while, if we have these tariffs that stay in effect for a while, the odds of a recession start to dramatically increase. And that's going to be the big risk that is going to triumph over any earnings benefit we get in the short term. Now, Thursday as well, you have BNY, KeyBank, Charles Schwab, M&T Bank, and some others. Thursday and after hours, Interactive Brokers, CSX, First National Bank, Bank of Ozark, Independent Bank, and then Friday pre-market you have Ally, SLB, State Street, American Express, Fifth Third Bank, Regions, Truist, Huntington, Comerica, and some others. So it's actually interesting this earnings season. It seems like you're getting some of your major banks as well as like TSMC and ASML. Usually you'll get that first week that's like, you know, Thursday and Friday of just a bunch of banks, and then the following week will be ASML, TSMC, United, and some of these other more important ones. But this week you're kind of getting all, you know, all of the first round starters, if you will, like reporting this, you know, the same week, which is kind of unusual. Now again, as far as this upcoming week, you can see Friday was a really big down day. It was a knee-jerk reaction. Nobody was expecting to wake up Friday and for the situation to develop like it did. Stocks actually hit a new all-time high on Friday. It looked like it was going to be a good day. A lot of areas of our markets were doing very well, and then again, just out of left field, Trump came out and talking about export controls, and the U.S. is going to have to place tariffs on China, and we're going to go through a period of, you know, pain for the U.S. economy. Nobody was expecting to hear that on Friday, so it was a little bit of a knee-jerk reaction, to say the least. Was it warranted? Probably. And even a lot of bulls on Wall Street say we were overdue for a bit of a, you know, fear injection into markets. But again, this time is a little different in the sense of it's a trade war with China and not the whole world. But a trade war just with China, a trade embargo, if you will, is enough to give you a recession. It's enough to cause the markets to really, you know, panic out. We actually had this debacle back in 2018. We had you know, trade war moments with China. What happened, right? Well, it was right here. You know, stocks fell for a little while, bobbed around, and then things started to get really bad in December. From peak to trough, the decline was almost 20% exactly. Like just China alone having a trade embargo or trade war can cause substantial harm to stocks. But I don't know, I think we're a little bit more used to like Trump saying shit and then backing out and blah blah blah. So I think it's gonna, you know, be a very much developing situation, but one we want to watch closely, and I will keep you guys posted and updated here on this channel. But I expect Trump's not going to have great things to say here in the next couple of hours. I expect you're probably going to have a red day to start off this upcoming trading week. But as I said in prior videos, you want to take advantage of this. You want to set yourself up in a position to benefit no matter what happens. How do you do that? You start legging into markets on these red days. If I put like $5 grand into markets on Friday, if Monday is another 2% down day, I'm going to put another couple $1,000, you know, $5,000, whatever the number is, into markets, because any moment things are going to change and get much better eventually. But there's the risk that you fall 20% or more. You never really know. So you want to have cash ready. You don't want to go all in on any one day, but you do want to be scaling in, so when that reversal does come, you have taken advantage of it, because you could fall 10% on the markets, and then one good headline comes out, tariffs are not going to go into effect, whatever it is. You could be up 6-7% in a day. If you are not scaling in that whole time, you're not going to be able to take advantage of that. Okay? You don't want to be in margin, and you want to have as much cash as possible. If you're doing those three things, you're going to come out of this a massive winner. And the question is not do we come out of this, it is when do we come out of this. That's it. That's the only question. So with that said, ladies and gentlemen, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Again, check out that link down below in the description of this video for the trading community. If you want to come join us, check it out. Have a great rest of your day, and I will see you in the next one.